Today in crypto. Telegram's brainchild, Ton blockchain has partnered with the social media giant's verified payment protocol Donate to use its native token Toncoin for subscription payments, amongst other things. Ton community is proud to announce that the Ton blockchain and Donate, a Telegram verified payment service, have become official partners, the blockchain protocol said on its official Telegram handle. Soon, users will be able to make donations and pay for their subscriptions in Toncoin, and channel administrators, conversely, will be able to collect their income in the same cryptocurrency, it added. The network said it will publish additional details bordering on the partnership in the coming days, showcasing the involvement of its coin will be an evolving innovation. The Ton blockchain was conceived and developed by Telegram founder Pavel Durov and his brother Nikolai in 2017. The project advanced into the initial coin offering (ICO) stage with Gram tokens offered to investors in a record $1.7 billion sales in 2018. However, this ICO was the source of the project's trouble as the US SEC came after the Durov and the Ton team alleging they broke securities laws. The lawsuit was extended for a long period and eventually ended up with Telegram paying $18.5 million in settlements. Since the lawsuit was concluded, Durov and his brother stepped away from the project, but he expressed excitement that the project did not die afterwards, noting the current team which rebranded the Gram tokens to Toncoin has all they need to succeed beyond the level it's currently operating at. When Telegram said goodbye to Ton last year, I expressed the hope that future generations of developers would one day carry on with our vision of a mass-market blockchain platform, so I was inspired to see the champions of Telegram's coding contests continue developing the Open Ton project, which they rebranded to Toncoin. I'm proud that the technology we created is alive and evolving. When it comes to scalability and speed, Ton is still years ahead of everything else in the blockchain realm. It would have been a shame to see this project not benefiting humanity, Durov said in a statement posted on his Telegram channel. Meta Platforms Incorporated, formerly Facebook, also faced similar backlash from lawmakers and regulators, keeping its Libra, now rebranded to DM, project bound from launching since it was conceived. A few years ago it was an executive's dream to work at Google, Amazon, Apple, and the other big tech firms of Silicon Valley, but now that dream has evolved into crypto startups. Whether it is to join a blockchain-related company or start a new one, high-paying executives and engineers are leaving the valley of big salaries and CEOs at an accelerating rate. The New York Times reported the exodus of big tech executives and the boom of crypto products like NFTs is seen as a possible reason for it. But if the fantasy of Silicon Valley talent used to be that cushy position involving good money, what do crypto firms represent to them now? Could it still be just about money? Big companies like Google are getting worried about keeping the talent in. Allegedly, they have started to offer additional stock grants for the employees who are likely to choose a crypto startup over them, although the company refused to comment for the paper. Evan Cheng, co-founder and chief executive of a blockchain-related startup called Mustin Labs, commented about the change of hearts. Back in 2017 or so, people were mostly in it for the investment opportunity, and added that now it's people actually wanting to build stuff. Here are some of the executives that have broken the big tech guys' frozen hearts. Related reading: Deloitte's survey shows 76% of finance execs think physical money is nearing its end. Absolutely yes, said Sandy Carter, the former Amazon vice president. She thinks that it's the perfect storm, and added that the time is just perfect to jump in on it. Meanwhile, Brian Roberts told the New York Times in an email, "I've seen enough cycles and paradigm shifts to be cognizant when something this big is just emerging. We are day one in terms of NFTs and their impact." Back to the question of why exactly is the talent leaving Silicon Valley. A part of the decision might be related to the salaries, but another side of it is ideological and enthusiastic. Engineers are tired of dealing with bureaucracy. Many feel the desire to build something, plus the ethics and moral aspects of big tech firms don't help either. Ms. Carter noted that some of this talent is being lured by the empowerment of decentralization against the dominance of large companies. It is appealing to not be part of the ones controlling personal data to generate a large income. Software engineering culture has always leaned toward anti-authoritarianism, explained Dan McCarthy from the firm Paradigm. He, who spent 7 years recruiting talent for Google, paints the scenario of working for a FAANG company, Facebook, Amazon, Apple, Netflix, and Google. Your impact on the product you're building may be negligible. Nothing you'll work on is truly yours. That's setting aside all of the ethical quandaries related to privacy, security, and ownership that are inherent to those companies and grating to anyone who self-identifies as anti-authoritarian on any level. He further explains the attractiveness of crypto startups' token-based vesting model, where employees accrue an ownership stake in the company over time just like stock options, but including the benefits of no exercise cost, tokens being governed by a transparent, immutable smart contract, plus they retain liquidity continuously over time, and other positive aspects. He notes several other luring points, like the openness of DAOs in comparison to the lack of transparency and invasive behavior of big tech, and the possibility of causing real-world impact, which he defines as the ability of one person to influence the direction of a project or technology. Related reading: Cardano founder spills the beans on fakeness of Silicon Valley. When you're no longer at the helm of a publicly traded company, you have more leeway to express controversial views. Former Twitter, NYSE, TWTR, CEO Jack Dorsey took to social media this week to express his discontent over venture capital's role in Web 3.0. Some of his Twitter followers agreed with his views, others disagreed, and some even blocked him entirely. Below is the concise version of the latest Crypto Biz newsletter, which is sent to your inbox every Thursday. For a comprehensive breakdown of business developments over the last week, register for the full newsletter below. You don't own Web 3.0, says Dorsey. 776 and Polygon launch $200 million fund. SBI Group launches crypto asset fund in Japan. Binance Labs leads $60 million funding round for multi-chain. Continue reading on Cointelegraph. Ethereum has had a good year in 2021, although the digital asset is looking to close out the year on a less than a bullish note. Nevertheless, investor sentiment around the altcoin continues to be on the positive side, as most expect the cryptocurrency to do well in the coming years. One of those is a crypto research analyst at Fundstrat, Armando Aguilar, who believes that Ethereum will double in price next year. In a report on Business Insider, Aguilar noted that the year has been a choppy one for the cryptocurrency market. There were several bull rallies and crashes that rocked the market for the year, and the analyst expects to see this choppiness persist into next year. However, next year does not look to be all bad from his perspective. Related reading: Jack Dorsey disses Ethereum, Web3 and Twitter rampage. Aguilar shared with Insider that he was expecting more adoption from institutional investors into Bitcoin, which would lead to what he sees to be a successful year for Ethereum. This has some important implications as the coin has now lost its footing above $4,000. Aguilar explained that he sees the price of Ethereum doing very well going into the year 2022. He puts the price of the second largest cryptocurrency by market cap at $9,000 by the second quarter of 2022. This will be propelled by the growth of decentralized finance, DeFi, the metaverse, and NFTs. Even with the explosive growth of DeFi in 2021, Aguilar sees this growth going into 2022 as institutional investors take more stake in the market. As this demand grows, Ethereum's value will grow with it, putting it at $9,000 in the first half of 2022. I believe that DeFi will play a major role for institutional capital next year, said Aguilar. As institutional and retail demand drove DeFi into new heights, the trends will continue to spill into 2022. For Ethereum to hit Aguilar's prediction, Bitcoin would also have to see explosive growth in 2022. This is why the analyst also expects Bitcoin to finally hit six figures in the same time frame. He puts this up to more adoption from institutional investors as they turn to Bitcoin to combat rising inflation rates. This will see the price of Bitcoin finally surge towards the coveted $100,000 price. Related reading: By the numbers, how Ethereum 2.0 1-year stats stack up. Additionally, Institutional investors are already getting exposure to the digital asset through the various ETFs that have been approved by the SEC. Aguilar notes that funds like Valkyrie are tracking U.S. public companies that are exposed to Bitcoin through the Balance Sheet Opportunities ETF. Just like Ethereum, Bitcoin looks to be heading towards a year-end close below expectations. The digital asset continues to struggle at $48,000 going into the holidays, suggesting that a close below $50,000 for the year is imminent. The debate over ownership in Web3 has waxed on stronger as prominent figures like Elon Musk and Jack Dorsey have continued to fan the flames. This has prompted those in the space to come to the defense of Web3 and provide much-needed explanations about Web3. One of those is a Croissant on Twitter, which makes informative threads revolving mostly around Ethereum. This time around, the Croissant replied to SpaceX CEO, Elon Musk, regarding his stance on Web3. Musk had posted a tweet mocking the innovation, asking if anyone had seen it, as he joked that he couldn't. Subsequently, the Croissant Edge replied with a thread focusing on explaining Web3 and NFTs to the billionaire. Related reading: Infinity Foundation launches $215 million grant to boost developer ecosystem. Croissant starts by explaining its foray into independent writing, first explaining how centralized platforms like Facebook and Twitter had managed to end years of hard work after shutting down its Facebook account. This served as an opening for the argument for Web3 and why it is important for internet users. Basically, with Web3, the users control the space. Using its own website, The Bakery, as a case study, Croissant shows how decentralized everything from payments to subscriptions is. All of it without needing access to users' bank information or having to involve a third-party payments processor such as Western Union. It explains how users can access the information on the website by owning NFTs and being able to hold on to these NFTs for life, pass them on as a gift, or even sell them on secondary markets to other users. A completely decentralized system that cannot be stopped by a single platform because everything is under the control of the user, stating that with Web3, I am the platform. In conclusion, it asks skeptics to read through the read to see that Web3 and NFTs are more than they appear to be. The comments by Elon Musk and Jack Dorsey have not been well received by those in the Web3 community. Most took offense to Dorsey saying that Web3 did not actually belong to the users but rather to the VCs and LPs who are investing heavily in the space. Related reading: Jack Dorsey disses Ethereum, Web3 and Twitter rampage. Tyler Winklevoss, one half of the Winklevoss twins, famous for Facebook and being the first Bitcoin billionaires, hit back at Jack Dorsey with a tweet that suggests the CEO has benefited from the technology. The tweet featured a screenshot of a news story that covered the ex-CEO of Twitter having sold his first ever tweet as an NFT for a whopping $2.9 million, tagging the picture with "brought to you by Web3." The space is still new territory and is in the period where people are having to decide on which side on the fence they sit with the technology. Time will tell if it will be the technology that revolutionizes the internet or just another passing fad. Hit the like button and subscribe to the channel.